General, I'd love to start with you in terms of how we should think about what to be prepared for, next steps, either Iranian response, what it means in the near term for the region at this point.
Yeah, there certainly will be an Iranian response. Despite what the president's tweet said, Qasem Soleimani was very, very popular inside of Iran. He was a national hero. He was very effective outside of Iran, too, creating turbulence throughout the region. So the Iranians have a lot of reason to strike back. I expect them to. I don't expect them to do it in any way that we've seen thus far. They may use drones, they may use cyber attack, but they are masters at doing the unexpected, and they have much reason to wreak revenge on the countries around the region in general, the Americans in those countries in particular.
John, we talk about the response in terms of the crude oil market. Crude also had been at a relative high, right, at the upper end of its range. How does it change the calculus, if at all, in terms of supply demand for the world?
In terms of lost barrels right now, nothing's really changed, Mike. It's the fear premium that we talk about from time to time that rises and falls with the various tensions that are inherent to the Middle East. What the general is just referring to, the expected attack, where does that take us? And in my view, the biggest vulnerability for world oil supplies comes from Iraq. Iraq has been, and I think will continue to be, the battleground, particularly the southern export facilities in Basra, which could be easily attacked by Iranian proxies, which they are masterful at.
And right now, I mean, would you characterize the response in terms of the markets as relatively modest or muted, or is this have the possibility of getting a little bit more, I guess, unhinged to the upside in terms of price?
I think right now it's certainly muted. I mean, to be only up $2 a barrel on this, because we're in new territory here. This is an escalation that we've never really encountered. Keep in mind, the attack on Abqaiq in Saudi Arabia late last year, there was no necessarily claim of responsibility for that. This is a direct move by the U.S. on Iran that invites a counter strike.
General, just to go through some of your bona fides here, you've been the Director of Operations for Coalition Forces in Iraq. You were the Deputy Assistant Secretary of Defense for the Middle East. In your experience, if you cut off the head of a revolutionary force like this, what is likely to be the response of this armed militia?
Well, I think the militia, the Quds Force, which is an Iranian force, and the militias that they control inside of Iraq, I think that's where you're going to expect the response to come from. They've instantly announced a replacement for Qasem Soleimani, but nobody was better and will be better than Qasem Soleimani. I would make one point on the last guest's comment. I don't think that they're going to attack the Iraqi oil fields. They understand that they have a chance now to extend their influence well into Iraq, well beyond what they've already had. I think more likely they might go for the Gulf oil, the offshore platforms in the Persian Gulf that are owned by Kuwait. But I wouldn't predict that the attacks would be in Basra, but I could be wrong.
I would just say that to the extent the Iranians want to try to inflict maximum economic pain on the West, that's certainly one way to do it. I mean, they have the resources on the ground there, but, I, of course, have to defer to the general.
General, former National Security Advisor John Bolton suggesting this morning on Twitter that he hopes this ultimately leads to regime change in Iran. Do you think that's where U.S. policy is now heading?
Definitely not. I don't think, John Bolton for years and years has been very much an Iran hawk. I don't think that we're aiming for, and I don't think we want to be in the business of regime change inside of Iran. We haven't done that very well in the region over the past couple of decades. But however, if it is an organic change of the regime by the Iranian people themselves, that's a different story.
So, General, are you looking at this opportunity for Iran to take revenge or strike back as a short-term threat, a medium-term threat? Can you give me a timeline on where you would see that the United States and perhaps other allies have got to harden their facilities and keep an eye out?
Yeah, I think it's an immediate threat. The U.S. Embassy in Iraq has already put out a statement that says all Americans need to leave Iraq as quickly as possible, either through the airport or overland. I would expect a near-term response from militias inside of Iraq who have seen their leader get killed, and then maybe a midterm attack from the Iranian country proper.
And obviously, I mean, current, U.S. military leaders must also anticipate something like this. I mean, do you think that this is going to go back and forth a bit, or would that type of response essentially be considered, to be the expected one, and then they would not further escalate from there?
Look, I know the Department of Defense, the Department of State well. I know they would not have done this attack unless they had thought 3 moves ahead on what they would do if there was a counter-response. This is the advantage of the attacker. At this point, we have the initiative. We're going to control the responses, not the Iranians. Hopefully, however, we'll see everybody moderate, and we'll see this calm down considerably, because this could escalate significantly and put the entire region, as your guest said, in turbulence.
How long do you think this really upsets the oil market? I mean, all things considered, what just happened overnight, I would say years ago, would have had a much more dramatic impact on the price of oil. A $2 move, to me, suggests that it's somewhat muted and may not last very long if that's all you got from the magnitude of something that we just did.
Right, and it's a rational response, though, Scott, right? Because there's no lost oil. As a matter of fact, we are in an oversupplied market. OPEC is working hard to reduce the supply overhang. Back in the day, if you want to call it that, we needed every barrel. We couldn't afford to lose a barrel from Saudi Arabia or anywhere else. We weren't pumping out 12 million barrels a day down in Texas, or the entire country for that matter. So we now have this firewall thanks to the U.S. production that we did not have before. However, with Venezuela offline, Iran offline, we are getting to the point where we can't afford to lose much more. We can't keep knocking these OPEC producers off the table and think that we're going to have, $2.50 a gallon gasoline for long. So we're getting to the edge, but we're not there yet, and that's why you're seeing the price reaction the way it is. The oil market's memory is short, and we're hyper-focused on the supply balance, and it remains robust.